So we set ourselves up for, I think, a currency crisis, not just a financial crisis where mortgages are in trouble, but where the dollar itself is collapsing. Our money is collapsing. Prices are skyrocketing. It's going to really hit the average American much more than just the stock market going down. Right? When your money is going down, right? When the cost of living is skyrocketing, right? That is going to be a big problem for a lot of people. That's where we're headed. It's ultimately going to be a dollar crisis, and that's really, like in my business, in my brokerage firm, in Euro Pacific Capital, that's what I'm trying to do is help people protect their wealth by getting out of U.S. dollar assets, by investing in Singapore and Switzerland and New Zealand and Hong Kong and other countries, owning other assets, to try to protect themselves from this crisis that, is coming. And most people are going to get blindsided by it, just like they were by the last one.
So what is the crisis, and how exactly do you feel it's going to go down? Because I did watch some of your videos about the housing crisis from 2008. Mm-hmm. You're predicting it years in advance.
Yeah. I mean, look, things always happen. I see things years before they happen because I understand.
And you're not the only one, right?
No.
This is something amongst your peers and your colleagues. You guys are all discussing this.
Well, I mean, there are people, most people who feel the way I do maybe they weren't on television saying it. They were saying it, to their buddies, in their own living rooms, and they were getting laughed at just like I was. Because I used to get emails from people, hey, I've been saying, this is exactly what I've been saying, and everybody thinks I'm crazy. And, it's just, they're the sane one. It's everybody else that's crazy that just it gets caught up in it. But what's going to happen is we are going to go back at some point into another statistic recession. I mean, I think that we've kind of been in one this whole recovery because I don't think the government numbers are really that accurate. I don't think that inflation is as low as they claim, at least as measured by the consumer prices. So I think that the economy has actually been contracting during the years that we've been pretending it's been growing. But I do think at some point, statistically, we will go back into a technical recession where even the government admits that the economy is shrinking, right? Where the GDP is negative for a couple of quarters in a row. And then what is the government going to do as a result of that? They're going to do exactly what they did before. They're going to take interest rates and bring them back to zero from wherever they are. The difference is normally they lower interest rates, and then by the time there's another recession, they're way back up 4, 5, 6%. This time, they barely got them back to 1%, and they kept them at zero for 7, 8 years, which is unprecedented. And, of course, the mistakes that are made are a consequence of money being too cheap, right? The reason that we had a real estate bubble, the main reason was because Alan Greenspan lowered interest rates to 1% and left them there for about a year and a half, and then took about a year and a half to raise them back up to normal. So you had a few years of artificially low interest rates, and that gave us this huge housing bubble. Well, we had 7, 8 years of zero. I mean, the mistakes that have been made under Obama dwarfs the mistakes that were made under Bush. And these are mistakes that are a consequence of money being too cheap, of the government setting the price of money as opposed to the free market. You get too much debt, you get too much speculation. And so we've got a much bigger bubble now. And when this one pops because it's so much bigger, right? So then all of a sudden the Fed has to cut interest rates again. And now what happens to the dollar? Because, see, the dollar has been rising these past few years because everybody thought, oh, the Fed's going to normalize interest rates, the Fed's going to shrink the balance sheet, when none of this stuff happens. When the Fed goes back to another round of quantitative easing, when they got to crank up the printing presses, when they don't shrink the balance sheet, but they blow it even bigger, right? It goes to $5.5 trillion, $6.5 trillion. I think the bottom's going to drop out of the dollar. I think the dollar is going to get killed. The opposite of what happened in 08. When the financial crisis hit in 08, the dollar had been falling for 7 years. It was at an all-time record low. And then when the crisis hit, it actually caused people to buy the dollar. But I think this next crisis is going to be the big sell signal for the dollar. People are going to rush out of the dollar as the Fed has to go back to more QE, as people realize that this is what I said from the beginning. This is a monetary roach motel, right? The Fed checked us in, and they ain't checking us out. There's no way to normalize rates. There's no way to shrink the balance sheet. And when people realize that this is a permanent situation, the bottom drops out of the dollar, and then commodity prices really start to rise. Remember when oil prices went from like $20 a barrel in 2001 up to 150, right? That was happening because the dollar was falling. And as the dollar starts to fall, all these commodity prices are going to rise again. And now inflation is really going to pick up the way they measure it. And the government can't do anything about it. They can't raise interest rates because if they raise interest rates, they collapse everything. All the banks that were too big to fail, they're bigger now. And it would be even worse if they failed. So they can't let rates go up.
Because banks absorbed other banks.
They got bigger. And now you have all these banks that have all these long-term loans that have low coupons on them. If interest rates go up, all these big banks are going to fail. I mean, people think rising rates are going to be good for banks. They're going to destroy the banks. They're going to destroy the housing market. I mean, and the government, this is the biggest thing. Look at the national debt. The national debt is about $20 trillion. The bonded debt. And that, of course, that doesn't even count all the unfunded liabilities. That's just where the government has sold a bond, right? A treasury bond. That's about $20 trillion. Well, what would happen if interest rates went to 10%? Well, it would cost the government $2 trillion a year just to pay the interest on that $20 trillion. We don't have anywhere close to that. I mean, right now, interest rates are almost zero, and we're spending about $250 billion a year on interest. But if interest rates actually went up, because the Fed had to fight inflation, the Treasury would have to default. They would have to tell the we can't pay on these bonds.
What are you showing me, Jamie? Is this the national debt?
Oh, that's the national debt crock.
God,
yeah.
Look at it spinning.
Is it at 20 trillion yet?
It's so pretty close. 19,973. Look at it spinning. Oh God.
Yeah, I know.
That's horrific.
But and so obviously the Fed has to keep interest rates low so the government can service that debt.
Look at Medicare, Medicaid. Jesus Christ.
Well,
what
yeah,
is that?
You can find the per capita. You add it all up.
That's not even a billion. Is that a trillion?
Huh?
What? That's
Which
not even
one
a
are you
trillion.
looking at?
That right there. What is that?
No, that's 1.1 trillion.
Oh, it is?
But that's largest budget items. Those are budget items.
Oh.
That's the budget. Social Security. That's not the debt. That's what they're spending.
Oh, God. See, look at those numbers.
If you go down lower, they'll probably have all the unfunded liabilities on that page somewhere. And then they break it down. Then they break it down per capita, per taxpayer. I mean, it's enormous. But my point is that we've got like an adjustable rate mortgage on that national debt. The government's got ultra cheap money. If interest rates spike, there's no way that the government can pay that debt.
This is hypnotic. It really is terrifying.
I've never seen it before. Wall Street is fraud, America is fraud, the world is fraud, banks are fraud, central banks are fraud. We live in an era of fraud. It's all based on fraud, and they get a percentage of the fraud. That's the business model. To suggest that there is any moral or ethical aspect to anything that's going on now is to be completely naive about the fact that we live in an era dominated by financial terrorists, jihadis of banking.
Bitcoin is fundamentally different because in Bitcoin, you don't owe anyone anything and no one owes you anything. It is not a system based on that. It is a system based on ownership. And no one can censor it, no one can seize it, no one can freeze it.